Hello, ladies and gentlemen. Great pleasure to be back here for the second day, and so nice to see so many of you. I was a little bit worried after the dinner finished last night, and a lot of people started heading off to the more melting pots of London in order to carry on drinking and eating and doing other things. So it's good to see everyone here. It's really a great pleasure. After yesterday's excitement, we heard really from Ronnie Cohen about how the invisible hand is guiding, the invisible heart is guiding the invisible hand. And that sustainability and impact has really been what corporate venturing is about in many ways. It's how do you bring the impact to the parent company and support the portfolio companies in what she needs. You know, she's looking for capital, customers, product development, hiring, and an exit. And corporations and the venture investors are designed to be able to help on that and show scale. But now, we're on to day two. We've got an amazing program. We've got Lord Adair Turner. We've got Lord Joey Grimstone. You don't have to be a Lord to speak on day two. We do have others, but it is nice to see them join us. And the main thing I have to do is introduce the superstar. You might have heard her a bit yesterday, but Eileen Tangle from In-Q-Tel is the co-chair today. So welcome to the stage, Eileen. Kick us off.
Good morning, everyone. It's nice to see everyone. So I've had a great week with GCV. Started out, of course, in Cambridge with a delegation. Got to sit in a GCV Institute. And then yesterday, of course, we had a great day. And as my 6-year-old would say, it was fantabulous. The dinner, the crypt. And I just really want to thank Jim here. This is the first event I have been to since, obviously, the pandemic started, and what a great event it's been. So thank you to Jim and to the GCV. We just want to give them, we never thank them enough, so thanks. So I started out in venture capital just a couple miles from here in 2002 with a financial VC. And in 2008, I started corporate and went, yeah, those corporate people, they really don't know what they're doing. It's kind of not a real VC. I'm just gonna do this for 2 years and then get out, because why would I stay here? And 13 years later, here I am, still here. Actually, I met Jim when my first son was born, and every time a GCV symposium comes along, I go, oh my goodness, this is how old you are. Of course, I think because of how he speaks, we're on number 18, but he is only 10 years old. Anyway, so I think, look, we've been here all as corporate venturing for a long time. We have grown tremendously. I think yesterday we were saying, when I went to the first one of these, there were 60 people. That was it. And look how big this has grown. We went from yesterday, 367 to 2,468 corporate venture capitalists. And all through that time, what's the great thing about corporate VCs? We're very consistent. We're very good partners to our companies. We help them out. We aren't just sort of coming in and out and not really helping them grow. The other thing, and of course you can see what is the entire theme of today, is that we are leading the changes in sustainability. So I'm just going to share some slides courtesy of my colleagues back in Virginia. And before I do that, I just want to shout out to the head of our London office, which is Nat Puffer. So if you want to know more about In-Q-Tel, he and I are both here. In-Q-Tel, briefly, I should have said this at the beginning, is really looking forward to investing with all of you. We invest on behalf of the US, UK, and Australian governments in defense and intelligence dual-use technologies. Should have said that at the beginning, but there you go. So today's theme is really about sustainability. Slides up. So, I entered corporate VC at the beginning of the clean tech 1.0 bubble. Sorry. Oh, thank you. Yeah, much better. So what was happening back then? High oil and gas prices. You guys probably remember, $100 a barrel. Lots of public awareness about clean tech. Lots of investor idealism. President Obama giving a loan to Solyndra, which unfortunately didn't work out so well, but a lot of government support around this thing. What happened? The oil and gas prices declined. Effectively what happened, and I was at Applied Materials, and we were investing in solar, And I remember Thanksgiving 2009, I had made the prediction that solar was going to go down lower than $1 per watt, and it did very fast, which unfortunately took all the momentum out of the U.S. industry. So what happened? You know, as I mentioned, I entered corporate VC in 2008. Back then, you had about 200 deals, maybe $2 billion going into clean tech. Went all the way up to about 350 deals. Keep looking here, sorry. Almost $4 billion going on, and then went down. Really bad reputation for VCs. I think, as you see here, 90% of clean tech investments failed to return any capital to investors, and the ones that did exit yielded lower returns. Now, here's the upside. The VCs lost money, but clean tech actually succeeded, right? So over 50% of US generating new capacity was added since 2010. There has been a 10x growth in the solar PV market, with the cost declining by 85% in the last 11 years. There's been a 4x growth in the wind power market between 2009 and 2019, and again, costs have declined significantly. And of course, there's room to grow. Only 5% of global auto sales in 2020 were electric vehicles, so a lot of room to grow here. And I know some of you are with the automotive and can tell us a lot more about this. So what did we learn the first time? Going too early is the same as being wrong. 2, hardware is just hard, and this is hardware. We have to have realistic expectations about capital and time. Tesla was funded in 2006. Nobody wanted to invest in it. No one, right? And it was, you know, I'm from the town where it was started. He had to go around. DBL, which was one of the first investors, was pleading with investors to go in. And it took 14, 15 years for everybody to see the results and look at those results. We saw Sir Ronnie Cohen talk about its market cap is bigger than its next 5 competitors combined. Project finance is difficult. And then, you know, in terms of acquisitions, old line industrial energy companies rarely make acquisitions at attractive valuations. So that's what we learned. So, you know, the way to make money right now, anyways, is to SPAC it. Now, what do we see? And that's what today is about, right? Investing has revived. Here we are again. The good news, it's a broader focus. You're adding not just to clean alternatives, but adaptation and mitigation, observation and tracking, and resources. This is at least how In-Q-Tel sees climate tech. The technology markets have matured, lower costs, greater consumer awareness, and because we learned from Clean Tech 1.0, and now it's called Climate Tech, of course, we now know we're smarter, the business models are more capital efficient, we understand the hardware risks and challenges, you know, we don't rely on government policy, and people are focusing on more profitable niches instead of being platform bulk commodity plays. So this is a list of, you know, we see that there's 5 types of funds here. We're going to hear from all sorts of ones here today. Climate general, climate vertical specific, impact, deep tech, and generalist.